Hey, welcome back to the program. This is Your Real Estate Chalk Talk. We're broadcasting from the Rack Shack Barbecue Studio in Eagan, Minnesota. HittnerGroup.com, HITTNER Group, all one word, HittnerGroup.com, or give us a call, 612-627-8000. We'd be happy to help you any way that we can. Of course, that first conversation with no cost and absolutely no obligation. Okay, Kelvin, you've been firing questions at us all day. Rapid fire. Boom, boom, boom. I got a couple of questions for you.
All right.
Sometimes, we come on with your money talk most of the times, and we just kind of roll into it, and you go through your updates on the markets and interest rates and what programs are available and all that. And people don't, I think, appreciate the expertise and the longevity in the industry that you have that comes to the table when they're visiting with somebody. So I'd like to take a minute, if I could, and just kind of review some of that and go back. We've been doing business for 15 or 20 years,
Right.
whatever it is, long time, and I've kind of watched you evolve and go through a number of companies and structures and all of that stuff to finally arrive at the place that we're at today, which is a really good place. So talk to us a bit about, you have a financial background, which I think is unique in terms of loan officers in the area. So when you sit down with someone, it's a different perspective than anyone I know that brings to the table. So talk about that, if you can, for a minute. What industry you came out of, and just to share that perspective.
Yeah. So prior to doing this for the last 18 years, of which we've been working together for 15 or 16 of those, I was like telling people that we've had coffee every Monday morning at 7:15 for 13 years now, which is a crazy long time. So, but prior to that, 11 years doing the insurance and investment business, where we were putting together financial plans for people. And we were looking at life insurance, retirement planning, college funding, disability insurance, all those things you think under that umbrella. So when I'm sitting down with somebody, I actually created for our loan officers we called our FAST app, but it really takes a broader picture than just the mortgage side. So we're looking at what are their goals around, and we don't get into it to the level that I used to, but at least we touch on, like, what are you doing? Do you have, how old are the kids? Because it's a question on the loan app, right? The loan app is just a great financial planning tool. Every financial planner would love our loan app, right? Because we touch on all these things, but then we can have that conversation, and it might dictate how much money we're putting down. We look at credit, and we did that in the past as well. What's their credit look like? What kind of credit card debt load are they carrying? Student loan debt load, good debt, bad debt. We both like Dave Ramsey stuff, so we've both gone through those courses, and we use Debt Snowball. So we're looking at and then we get to mortgage, right? But the conversation before that really sets us up, knowing what we do over here. It quite honestly makes the mortgage conversation pretty quick, quite honestly, because we have all this backdrop, like, okay, this is the bigger picture of what we're doing. So we're going to do this, 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 and this, and we look at overall cash flow, not just your mortgage payment, but what's your mortgage payment in relationship with all your other debt. So we look at what's their current outlay, what's their future outlay. Right now, and we'll get into rates a little bit later, but rates have been really attractive. So we're really looking at things saying, okay, boy, we could really make an impact right now. And we're doing that with a number of people actually off the radio show. So
let's talk about the structures, if you will, of the organizations that are supplying the money and funding the loans. I mean, when we first met, you were working for our parent company. That's when we owned RHS Realty, and so and River City Mortgage at that time was the parent company. And then we got sold and spun off and all of that stuff. Then you went from there to a non-local company. And talk about that, how that relationship worked, and what your the result was of that. And
well, I've always tried to stay with the correspondent lending world, right? Just because, as you talked earlier, it's nice to be able to control the transaction. But what we found is when we went with even a correspondent lender that was out of state, what was difficult was that control piece, right? When you're having to talk to somebody in Ohio to figure out, get help, get answers, it's just different. And my team, as I have 10 different or 11 branches that I oversee at AMEC Home Loans. And those people have been with me for a long time, right? And they came to me and said, hey, we need to be local. We need to find a local correspondent lender that we can that we can go to and get questions answered, and have bigger, quite honestly, you want influence, right? It's all about influence and the ability to get things done. So, I think the thing we talked about earlier about having that local presence, that local, being that local lender. And now that, AMEC Home Loans is the largest non-bank lender in Minnesota, it's really nice to have that size behind you, but yet being able to get a lot of things done quickly.
So there was one step that we missed in between AMEC and the non-local, and that was another local company, which actually had a similar structure to AMEC, but it was a short-lived relationship. I don't know if it was maybe a year or year and a half, something like that, and then you went to AMEC. There you had your local stuff. It was all the same, but yet it still wasn't quite the right fit. What's the difference between that, and there's many others, in the market that are similar to that, and AMEC? What sets them apart?
Well, I think what sets AMEC apart is the flexibility that the branch managers have. So our flexibility in how we build our branches, how we grow it, the price structure. Quite honestly, Todd runs the company, and Jennifer, they run the company, and our corporate margin is so thin. It's great. They've done a nice job of controlling costs. So when you look at our cost structure versus the other local correspondents, I know for a fact that we always talk about the corporate take, right? What's corporate taking to keep the lights on?
Right.
Ours is so low, I think, just because of the volume and because of, quite honestly, the lifestyle of the ownership. Just fantastic.
They don't
job.
live large and
don't need to, and everybody just has a real humble,
I
think just a real humble attitude at AMEC, and just kind of low key. We're a flat organization. There's not layers of people, and so it's the best platform that we found, and we'll all be hanging up our I was going to say jock, but I don't know if you can say that on the radio. But we'll all be hanging it up from AMEC, which is kind of nice to know.
And Todd, I met Todd about 20 years ago, actually, and it was just him, trying to slug it out, trying to get something going, and interesting guy, and very good. So what then? If you're talking to another loan officer, maybe from another company that is dissatisfied with the level of service that is being provided to them as a loan officer, what's that conversation look like to you? How are you explaining to them or trying to share with them the differentiation between where they are and AMEC?
Well, a couple things probably. One is, depending on the environment they come from, talking about our corporate our corporate structure and how operations run. At the end of the day, everybody just wants their loans closed on time. They want quick turn times. And Jennifer Harrison, when she came to AMEC, that was the turning point of AMEC, right? That was Todd did a great job of building it, but then you need to have somebody start to
administrator.
Run it. You know what I mean?
Yeah,
there's a difference, right? And man, ever since she's taken the helm, AMEC just operationally is just heads and tails above everybody else. So we would touch on that. We look at compensation. How are you paid? What flexibility do you have in terms of winning deals? Because at the end of the day, we always want to, and this, at the end of the day, we never want you to think we can't win the deal, right? So there's some things on our side, on the back end, that we do to make sure that we can always come in, always win the deal. And then it's, what arrows do you have in the quiver? The arrows that we have in the quiver are things like we're doing right now with Relocator, where we're rekeying people's homes for free as a closing gift. That's kind of a fun thing. We're giving away free appraisal, like on our show, but not every company would allow you to do that, right?
Okay.
You don't have some of those things. So second look rewards, again, if we get a closing disclosure or a loan estimate from another company, we give an Amazon $25 Amazon gift card. We're just doing all these different things. We have a $10,000 closing guarantee saying, hey, if you give us the information, we do a pre-underwrite, we offer a $10,000 closing guarantee. I mean, just all these things that just, you just got to know what arrows you have in the quiver, and our quiver is full.
Yeah. What I find is that we have, in the last minute and a half, you have in-house products, more portfolio products that you have available to you, that they've created to compete in the new construction world, and maybe some different areas that are not so cut and dried. that you can avail to your loan officers
Mm-hmm.
to offer to customers to put a deal together that maybe another lender just couldn't do.
Yeah, and the other thing that's been really helpful in that is this past year, Todd purchased a bank on the west side of town, and we've used the bank to do those non-traditional portfolio type products, commercial lending, small SBA loans, some of that additional lending that we really haven't introduced as AMEC yet.
Right.
But the bank's really been able, when you got this deal and you know it's a good deal,
Yeah.
but it just doesn't fit into the box.
Mm-hmm.
Now we have an outlet over here with the bank that Todd owns that we can say, hey, could we look at this and see if it makes sense? And we've been able to solve some things there. And then in-house, we have a really nice new construction product that we created from scratch as well, where we administer the draws. We do the whole thing from start to finish.
So if a customer wants to refinance and the great rates that we have today,
wonderful rates,
or if a loan officer is interested in maybe having a conversation with you, what's the best number?
Best way, 651-231-2500. Again, 651-231-2500. That's it.
This is it for this week on your Real Estate Chalk Talk. We'll see you next week.
You've been listening to your Real Estate Chalk Talk with the Hittner Group, the leaders of the #1 Coldwell Banker Burnett real estate team in Minnesota. If you want to get more when you sell and pay less when you buy,